ATR can help gauge the strength of a move. In this example, price falls out of this range and drops significantly. During the span of these events, ATR is relatively high compared to the periods before and after the most drastic movements. This can be seen quite easily without necessarily looking at the exact values of the ATR during this particular time period, which has a distinct peak. Around the time from June to August, ATR begins to fall and flatten. This is also the approximate time the downtrend begins to weaken. Then later there's a moderate upswing, which is also quite stable and has relatively little volatility as well. That is why the magnitude of this upswing is comparatively lower along with the ATR in comparison to the previous downtrend. More volatility with larger moves usually means instability and a comparatively higher ATR. Again, here there's a large move, an acceleration to the downside, and ATR rises. Then during the next upswing, there's still high volatility to maintain ATR at relatively high values, which in turn is an indication of strength for movement on the chart. And in this case, it's the uptrend movement. Moving along, the uptrend begins to weaken, and that can be seen quite easily with flatter movement and a slight decline, along with increasing red selling volume. What is being demonstrated here is a movement, in this case again, a bullish movement with an uptrend. Then what the declining ATR can tell us here is, generally there are progressively smaller movements from day to day, from candle to candle. As price begins to consolidate at these highs and begins to slide slightly, then as the relatively range-bound movement continues into the beginning of 2023, there are a few rapid swings in price in the short term. This is of course a volatile movement, and the ATR will naturally rise, fall, and flatten as price movement on the chart naturally begins to strengthen, weaken, and consolidate. In addition to gauging the strength or weakness of movement on the chart, ATR can be useful for making approximate estimates of potential movements. In this example, nearing the end of April, an uptrend begins to lose steam, and that can also be seen with the ATR falling. Then naturally, as there is more red on the chart, there is growing bearish sentiment. In fact, volatility does increase with a potential bearish reversal developing with some abnormally large red candles in the past few days. The hypothesis here is the early reversal can accelerate further with another large drop, either in the form of a gap or another large red candle. 73 is a short-term support with candles making lows near it, and using the approximate ATR value of 1.43 provides an approximate threshold that is eventually breached, trading and eventually closing under 73, along with advancing well under the range of 1.43 set by the ATR. It is not too surprising to then see a bearish continuation develop this downtrend further. Once again, the strongest part of a move in this case, the accelerating drop of the downtrend from late April into the middle of May. The bulk of a strong move can normally be within 1 to 3 ATRs. By ATRs in the plural form, this is referring to multiples of an ATR value, usually the one used to estimate the magnitude of a move near the reversal point or breakout point. In this case, after decisively going under 73, the bulk of the strong movement goes down that approximate ATR value of 1.43 once, twice, thrice, and after that, usually going past to the fourth or fifth ATR multiple, will at least begin to see movement flatten temporarily or begin to consolidate in a range and even begin to reverse eventually. And as usual, the weakening of a major movement generally sees ATR decrease, such as in this case nearing the beginning of June. This next part shows a familiar short-term spike of the ATR during a strong movement, in this case a large bullish continuation. Before we saw a downtrend begin to weaken, and in this case we see an uptrend begin to weaken as price begins to flatten and even decline slightly. Notice here after and before the major bullish continuation, ATR was comparatively lower and did not fluctuate as much because during these periods price was consolidating and relatively much more stable compared to the strong and volatile jump in the transition to August. Around the time this jump began, ATR was around 1.34, 1.35. No need to be super exact. In this case, accuracy down to 2 decimal places will be okay. We can say the decisive breaking point is around the 70 boundary. Once price crossed above that, it easily moved up $1.35 higher. In fact, the strongest part of the bullish continuation did this around 3 times. Then, as is commonly the case, a strong movement is relatively short-lived and soon begins to flatten, just around the time price begins to consolidate to establish a hold on its current position, and volatility decreases, along with a falling ATR which also eventually flattens.